All right, guys. This is your Traded Crypto channel coming at you. It's December 29th, 2021. It's another red day in the market. It's pretty rough. Definitely, definitely feeling it. Gonna try to break some things down, kind of give you some of my analysis of what I think's going on. I think it's still a lot of tax loss harvesting, honestly. Institutions pushing the price down for the new upcoming quarter. They're going to get these prices down. They're going to probably come at this stuff full fledged and start buying the hell out of everything. Maybe, maybe not. But we've had a really tough 24 hours. So we're looking at the 4 hour right now, and RSI is pretty exhausted. I mean, we're down at some pretty low levels, though we are creating some bullish divergence. Um, so I believe that's only hourly. I'll get back to that in a second. Um, but yeah, we're oversold for sure. So basically, a lot of people are talking about the bump and run pattern. So basically, we broke out of this channel right here with the red line, and broke out, got resistance at this Fibonacci 52K level. It's also the 21-week moving average ish, which makes sense. So we're coming down to retest this previous line of resistance. Now, if we can turn that into support and get a nice bounce off, that's what we want. That's what we need. We get that. That'll be the bump and run, and we come on up. But we really kind of need to get to work on that. If we come down below and break down into this and come on down, I mean, we can get go back down to the 41K level, and that would suck. So not trying to be negative, but the crypto markets are definitely taking a huge beating. Meanwhile, the S&P is rallying. And a lot of times, when the S&P is rallying and Bitcoin's going still, apparently, Bitcoin's just kind of getting ready to go crazy. Hopefully, it's to the upside. I'm kind of getting a little bit of a dip as we speak. Look at the hourly. This is where I was getting the bullish divergence. I'll show you that. Oops. Let's see the actual size. Yeah, so we've been going kind of lower, trending lower while the RSI is actually going higher, which tends to be a RSI divergence, bullish divergence. Of course, it also could mean that on the stochastic RSI, it looks like it could come down. So it's just the regular RSI looks like we're getting some bullish divergence. The bears are running out of steam. I mean, I'd have a hard time imagining that they have much more energy to push it down. But we do have a little bit more room to go to where we could come down to the 46K level. 45 could happen. We really don't want to. We want to make a higher low. So if this ends up being that higher low, that wouldn't be too bad. Yeah. But also the fear and greed index yesterday printed a 27. I guarantee you today it's probably a 15 or a 20 at least. Now, if it does just print like a 26 or 25, that could indicate that we might go a little bit lower. We'll have to see about that. And on-chain stuff here. I mean, like a couple of things. These are just at a quick glance. You have number of active addresses. This is over the entire year, and we're like not even at all-time highs. It's just for me. I just don't see why we'd be topping out right now. Transfer volume. I guess that is a little higher. Number of transactions, definitely not at an all-time high. I know the hash rate's not nearly at an all-time high. Mine difficulty, no way to really gauge that. But there was one other one. Transaction fees. Where is it? Mean block interval. Yeah, the transaction fees are like have been extremely low this whole time. I mean, usually like last time Bitcoin topped out, the transaction fees were like crazy, kind of like how Ethereum transaction fees were, or have been, you know, a couple hundreds of dollars. Like at the peak of the market last time, Bitcoin's fees I think were $50 to $100, if I can remember right. It's been a while, but that just gives you a. I mean, just we're not topping out on a lot of these indicators, and then apparently the hodl ratio, people are they're keeping their Bitcoin right now. So this is just like kind of a forced selling, in my opinion. It's fundamentally maybe it could be the tax loss harvesting. Okay, so this is on the Crypto Watch chart, which is free. TradingView is free too, but Crypto Watch doesn't kind of doesn't harass you as much with all the um, with all of the advertisements and trying to get your money, so to speak. But I was just looking at the VPVR, which most of the time you have to pay for that indicator. And basically, this is the amount of trading volume, the amount of price action that price has had. So you can look at this as like these are like springboards, or like things that are keeping you down or keeping you up. And we're at one of the highest trading ranges right now. We really want to get up above 47.5, which is I think kind of like that's one of the heaviest zones. Let's say we somehow just start falling and we fall really hard. I mean, the next springboard we have this is at 35,000, maybe 38, 35. I mean, we're not going to stay at those levels long. If we wick down there, maybe, but if we come down there really hard, 35K, and then we have a ton of support at the 30K level. But I'd be surprised if we come all the way down there. And then looking at the 4-hour, change this up a little bit. Might take a second to load. Actually, we're there. All right. And it's good to have, one of the things they say, just make sure you have multiple charts, Look at multiple charts, that way you'll see different things, and they always read a little bit differently, especially if they're getting their pricing from different areas. So this is a little more immediate. So our heaviest accumulation besides the area we're at right now is at 45,000, 45,700, 46. It'd be really nice if we hold the 46.8 to 47 area right now, but we'll have to see. I just want to make sure I'm getting this right. But yeah, but the best thing to do is just hang on. I think the Q1 is going to be good for everything. Crypto mining stocks, blockchain stocks, ETFs, they're still at good buys, I think. So we'll see what happens. Hopefully the world is ready to keep going crypto. If the world isn't ready, then maybe we go into a bear market for a while. I mean, like if we break below, if we go back down to 42 and it's not a quick wick back up or anything, like we go back down, I think that's kind of a bear market. I think we're going to have some months of winter, but also like my biggest thing is actually, the problem is Bitcoin dominance right now. It's at 40%. That means the rest of the market is 60% worth of the altcoins they outweigh Bitcoin. So you need to look at the altcoins for the actual health of the market. I mean, Bitcoin, yeah, that does have a lot to say, but looking at the total market cap, we're still above the 21-week moving average, and no one's talking about that. And that's something I've been raving about. But I will say, if those moving averages, fail, and they have a full weak close below them, I think that's where I would really start to reassess where we are in the market. And let's just take a look at this really quick. I'm really curious if we're going to get a bounce right now. It's trying to go below 47, but it's not really allowing it. Let's see if it holds. It'd be great if it did. But yeah, looking at the total market cap, excluding Bitcoin, this one's particularly healthy looking. There we go. And that yellow line is the 21-week moving average, and we wicked to it a couple times over the last couple weeks. But yeah, we're like well above it. That looks really healthy to me. Yeah. So yeah, that looks really healthy. And here's the total with Bitcoin. And we're above it there. So I mean, it's looking. Bitcoin looks bad, but everything else actually looks pretty decent. We just gotta get through the next few days, get to the new year, and I'll leave it at that. Just hold strong. If these, if the total market cap does break below, I'll post an update. And that might be where people might want to just get out for a while. All right, have a good one. Peace, and Semper Fi.